please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The top two losers in today's trade are from the IT pack. So you've got Wipro as well as Tech Mahindra sulking in trade. HCL Technology too deep in the red. There could be two key reasons for that. One, the H1B processing opened yesterday, and this year could be quite tough for US employers to go ahead and hire foreign workers. So that could be playing on investors' mind. And secondly, given the steep run-up of the recent rally and the 12% outperformance of the sector vis-a-vis the Nifty in the first 3 months of the year, the expectation was that F519 or even Q4 for that matter will show an acceleration in growth. But now preview notes are coming in, and the street is, analysts are talking about what they expect in Q4 and in terms of commentary, and there it sounds a little more somber. It perhaps may not be much better than what we've seen in F518. So that also could be casting a bit of a dampener, and that could be the reason why we've seen some amount of profit booking. Some news from the Centrum Group: they will be selling their money exchange business to EBIX for 1,200 crore rupees. Let's get the intraday chart up for you on Centrum. I think this is something that was reported in the Pink Papers as well yesterday, that they will be selling the money exchange business for 1,200 crore rupees. We'll try and get chatting with the management as well. But in the meanwhile, let's invite Ashwini Gujral and Rajat Bose on the show now. Ashwini, still chopping around at the index level. What have you made of the day so far, and any trading strategies?
See, we've been hanging around the upper end of the range on the Nifty, which is about Nifty futures 10,250 to about 270. We touched, I think, 10,268 even today. So given that we are dealing with a sideways market and we are hanging around the upper end, not able to pierce it, chances of a 2-3 day downside towards the lower end of the range become extremely bright. So if the range is 9950 to 10,250, then the risk reward in the short run is probably on the downside. If you keep a stop around the highs of this range, I think you could get more downside action. Having said that, Adani Enterprise sell with a stop of 161, a target of 150. Hindustan Zinc is a buy with a stop of 304. Target of 321, and Jubilant Food is a sell with a stop of 2330, target of 2250.
So Ashwini, second half you're expecting it to be softer, is it?
If not second half, maybe tomorrow, because definitely there's no trend. So if we are dealing with a sideways market, you are at the upper end of the range. Either we break through the range or we go towards the lower end. That sort of decision is still pending.
Okay, all right. Ashwini, what about some of these stocks that have corrected a goodish bit? Century Textiles, for example, the stock has moved to the high point of the day. It had a good run in the last year, and then it corrected close to 30% from the top. Your take on that stock?
See, inside the range, sometimes things will move up, sometimes they'll move down. But overall, it looks like Century could have a rally back towards, 1260, 1280. So that way, certain stocks which have already moved up like Jubilant, Titan, etc., they are coming off, while others which have been declining, they are moving up. So that's how range bound action pans out.
Okay, all right. Let's go across to Rajat then. Rajat, your calls for today?
See, prior to giving calls, what I would like to say is that this is actually just a course correction in a reactionary pullback rally that is happening since 23rd. I'm expecting the Nifty to climb up in the first couple of weeks to about 10,370 to about 10,400. That's the maximum stretch on the upside that I'm expecting. After that, the downtrend will resume, the intermediate downtrend. As of now, on the downside, I don't think it will fall below 10,150, and it will start climbing up once again. For today, I have two calls, one buy call and one sell call. Buy Sun TV futures, targets would be 895 and 904. I earlier gave the stop loss at 872. Now you can actually push the stop loss a little higher to about 875. And there is a sell call on Godrej CP April futures. Here the stop loss would be stop loss would be about 1112.50, and the targets would be 1089, 1084, and if these two targets are also taken out, then 1075 would be the final target for the day.
Okay. Thank you very much, gentlemen, for joining in. Let's get the early rates up for you on your screen. Remember, yesterday Europe was shut on account of Easter holiday, and this morning we have woken up to a very steep sell-off in Wall Street. However, Asian markets are trading lower but not significantly, and the Indian markets, as you can see, are trading quite flat. The CAC and the FTSE are in the red, so down close to about 0.5%. Let's see how the day progresses. A lot of the Asian markets like Hang Seng have seen a recovery of close to about 1.5% from the low point of the day. So if you pull up the Hang Seng index, is currently now trading in the green. So there has been some recovery across the Asian markets. The CAC and the FTSE, to start with, are trading in the red. We will slip into a very short break.
Well, keep an eye out on a few stocks. Maruti, remember, they clocked a number of around 1.6 lakh units for the last month. That stock's not done much, but if you pull up a couple of other stocks like Jai Bharat Maruti, well, it gets almost all its revenues coming in from Maruti. Well, that one has given you returns of more than 25% for this week itself. That's in the last couple of days. The stock week to date, in fact, is a chart we should be looking at. Even Lumax Industries, well, that stock as well, that company gets nearly around 35 to around 40% of its revenues coming in from Maruti. And that one as well is up nearly around 6% for this week. So week to date, both those two stocks have done quite well. But moving on then, the government has imposed a 10% duty on import of key smart components like camera module as well as printed circuit boards assembly in the hope to boost domestic manufacturing. One of the companies that could benefit from this move is Dixon Technologies. Mr. Atul Lal, the MD of the company, joins us on the phone line. Hi, Mr. Lal. Well, this news should come as good news to you because you're going to be setting up a facility that manufactures some of these components that are used for the mobile phone. Your sense, sir, this 10%, is it enough? And in terms of the JV that you're going to be starting in the next 2 months odd, what kind of revenue potential do you see out of there?
Yeah, absolutely, because this is in line with the phased manufacturing program that was co-developed between the industry and the government. So the government very prudently and as per their commitment have announced this custom duty of 10% on the PCB, which is of a significant value in any mobile phone, on camera modules and connectors. So in Dixon's case, well, to answer your question, 10% duty has been imposed, and we feel that it's good enough to deepen the manufacturing of these components and parts within India. From Dixon's side, we have already committed investments for creating a capacity of almost 1.3 million feature phone PCBs in-house, or almost 0.5 million smartphone PCBs in-house. So we are in touch and we're getting great response from the various brand owners for doing this activity. I'm not able to share the numbers at present. It's going to take some time to put those estimates together. But definitely it will enhance our revenues, and more than the revenues, what's going to enhance is the margins. So it's a very, very positive step for Dixon as such.
Are you Mr. Lal, are you currently getting any revenues from sale of printed circuit boards or PCBs?
Well, in our case, as far as the EMS activity is concerned, the sales revenue is not that important. What is extremely important is the value addition and the profitability. So on both these fronts, there will be a very significant positive for us.
No, fair enough. We take that point, but we just wanted to understand currently, is there any contribution on revenues and margins on account of sale of printed circuit boards?
No, at present it's not there.
It's not. So when do you expect production to ramp up? And when will these revenues come in, or value accretion?
So the lines have been ordered, the equipments have been ordered. And, we hope, we are confident that by July, we're going to be running the normal commercial production another quarter.
Okay. All right. For that particular unit that's going to be engaging in PCB, that PCB facility that you're talking about, sir, how much money have you put in? Around 10 crores?
No, this is going to be more. It's going to be almost 25 crores.
25 crores. And traditionally, what is the asset turn? On this 25 crore investment, what kind of revenues can you generate at optimum capacity utilization levels? Maybe you'll scale up in the next year, but for FY20, what kind of revenues can you scale up to?
It's slightly early. Just give me some time. I can come back to you on that number.
Okay.
That what is the revenue and the profitability?
The asset turns, roughly, can we go with 3 times? 75 crores you'll be able to do, 50 crores you'll be able to do from here?
Oh, definitely.
Definitely. So we can work with a number of 50 to 75 crores at least.
Absolutely.
You're saying the major part, though, is going to be the margin accretion that you're seeing. As of now, you're doing margins of around 4% on this PCB facility. What kind of margins do you see coming on board?
I feel that in mobile, as a vertical, because the PCB, the margins are going to increase to almost 70 to 80%.
Okay.
Okay.
Mr. Lal, who are your key competitors who manufacture PCBs in the domestic space, or Indian companies who manufacture this?
Some of the brand owners, I understand, have made these investments.
Okay.
Right? The domestic brand owners and also some of the multinational brand owners. And a large multinational EMS in mobile space has also made these investments. So this is the comparative landscape as of now.
Okay, all right. So we'll keep an eye out on this front then, sir. I remember the last time you told us that Q4 is shaping up well. Things are looking as strong, right? FY19, you could give us any guidance?
So, as I shared with you last time, Q4 is in line with what we had budgeted. In 18-19, we are expecting a significant, growth level in the range of around 25 to 30%.
Okay.
And in the other ratios as well.
Okay.
Okay?
Okay. All right, Mr. Lal, thank you very much for joining in. So that's Dixon Technology. Right now, the company does not manufacture printed circuit boards, but they've set up a facility which should be up and running by July, which means perhaps half of FY18 or maybe even 9 months of FY18 will get the benefit of printed circuit boards, not so much in terms of revenues, but more in terms of margin accretion. So small for Dixon Technology, but the stock is a bit excited. Some news, Roads Minister is calling for a stakeholder meeting this month on the scrappage policy. We'll slip into a very short break.
Then, Binani Industries has been allowed to settle the insolvency with lenders. Analysts question whether this will set a precedent for defaulters to settle outside the IBC framework. We spoke to Mr. Karji, the advisor to Binani Industries, a while ago. Here's a slice of that conversation.
Thought it would be best to try and settle with Ultratech, who we thought would be an ideal partner, and they had anyway enhanced the bid, meeting all the liabilities. So this is the background. If you ask me honestly, we can close this transaction. We have already written letters on last Friday or maybe Thursday to all lenders. We are ready to close the entire transaction within 14 days. Whether it is secured financial, unsecured financial, statutory or operational trade, we are ready to meet their legitimate legal claims. To be very honest, we would also want equity shareholders to gain and benefit. So we really need to sit down. We have not really sat down at the COC. We don't have certain numbers. There are gaps what we are requesting. Only once we do that, we will be able to work out the total 100% legitimate dues which we want to pay.
Okay, by the way, some very important flashes on your screen. This is what CNBC TV18 has learned from its banking sources, that Binani Industries has presented no concrete proposal to the lenders. And although we heard some time back that the NCALT has said that, if the lenders agree, then perhaps they could go ahead with Ultratech's offer. But as of now, it's not that, a higher offer has been received by the lenders. In fact, let's quickly go across to Ritu Singh. She has all those details. Ritu?
Well, a few key questions have been raised by the bankers with respect to the Binani Cement settlement case. Number one, the offer of repayment that Binani Industries has been speaking of, which is by way of raising, by sale of Binani Cement to Ultratech and raising of 7,266 crore rupees. This offer has not been presented to the lenders in the first place. Second, any discussion on this proposal can only take place once the offer is made. So far, it has only been disclosed through a public release and in court. The second thing that the bankers are questioning is the dues itself. Now, Binani Industries claims that the dues that are pending to repay all the lenders, including the financial as well as the operational creditors, is roughly about 7,300 crore rupees that they're proposing to raise. But lenders argue the dues, if you take everything into account, is roughly about 8,100 crore rupees. So, if at all a settlement is to be considered, that is the sum they're looking for, not 7,300 crore rupees. And lastly, a meeting may be held tomorrow with the key lenders, that is SBI, BOB, Edelweiss, ARC, but only and only if the proposal first is presented to the lenders, which so far, as I said, has not been made.
Okay, all right. Ritu, thanks so much for joining in, giving us those details. Just cautioning all the shareholders of Binani Industries. Remember, we spoke to the Binani Industries advisor earlier today and we put that question forth. Will equity shareholders get anything? He said there is a possibility, but there may not be a possibility as well. It depends on how much money is there after they pay all the creditors. So just keep that in mind. The stock is at around 91, 92 rupees. Just a couple of months back, it was nearly around 150 rupees. So you pull up the last 3-month chart, you'll see that in fact the stock has been coming in lower. So just, caution yourselves trying to play this kind of deal. Maybe there's a possibility that Binani Industries shareholders may or may not get anything from this.
And anyway, Ritu is also saying that, even this 7,300 crore, which has been offered by Ultratech, is actually inadequate to meet the lenders as well. The lenders need 8,100. And then, first they have to be satisfied, and then we come to the equity shareholders of Binani Industries. But that point is well taken. We'll slip into a very short break.
Let's chat commodities, where 1 quarter is done, and we have seen the gold prices stable, crude prices up, and US dollar down, and that perhaps has been supportive for many of those commodities. But joining us now is Jody Gunsberg of S&P Global to talk more about on what the new quarter could be doing as far as many of these asset classes are included. Jody, hi, good to have you. I want to start with the gold prices, which were up nearly 2% in the previous quarter. How does this quarter look to you? Where will you see the fundamentals really forming?
Gold is only up slightly year to date, so performance alone isn't that exciting. What is far more interesting is how steady gold has remained around the volatility of the equity markets. Gold has stayed relatively positive while the stock market dropped, and did it with just about half the volatility of stocks. The correlation remained very low, which is consistent with history and makes gold a strong diversifier for stocks. That could be more important now than ever if this bull market ends.
Sure. One thing that the gold and other asset classes take cues from is the US Fed rates. And would you say that 3 off total in this year has now been fully factored in?
Generally, rising rates are good for equities, especially if there is growth and inflation. Though since the most recent hike, India was basically flat and Europe lost about 1.5%, I think most markets had a muted reaction to the rate hikes since the Fed plans have been so well telegraphed. However, the US is down 4% and China lost more than 6%, but those losses are most likely due to the rising trade war tensions rather than the rate hike.
Jody, if you look at the previous quarter, almost all the metals have closed in the negative. The first couple of months were good, but all of that turned around for the month of March. Where the metal prices are right now, would you say is a good buying opportunity?
The metals index is just reflecting the market performance rather than driving it per se, and there is very little correlation between the metals and major markets globally. However, an event like the trade war could slow both the demand for metals and economic growth simultaneously. That, in turn, could impact the global markets.
Jody, come in on the crude oil prices also, because there is a very different view on the street. We have reports suggesting 50 this year, then there is $80 being talked about as well. And then, of course, there are inflation concerns too. Where do you see the crude prices headed, and how would you look at the rest of the scenario?
Based on the index history, even if oil were to rise to $80, the gain wouldn't be unprecedented. Since energy is the most volatile component of inflation, rising oil is likely to accelerate inflationary pressures. However, due to the storage costs and futures trading, the oil itself doesn't always provide a good return through inflationary periods. So investing in energy stocks for inflation protection can be a better choice, especially for the less hedged, smaller stocks.
All right, that point is well taken. Judy, one more question. And when you look at this quarter now, what sector are you willing to bet on the most? Is it going to be metals? A lot of people have been talking about gold. Or is it going to be equities back on your radar?
I would describe the first quarter as a mixed bag, characterized by a pickup in equity volatility. Gold held steady, oil rose, and the dollar fell. It was the perfect quarter for either broadly diversifying or taking a single position based on a view. Now, if the S&P 500 is negative at the close, this quarter will be most remembered as the quarter that ended the 9-positive quarter streak, the 5th longest streak in history since 1936, tied with the one ending in March 2015.
All right, Jody, we'll let you go at that. Thank you so much for joining us. Well, that's the view coming in from S&P Global. Then they expect the precious metals in the commodity sector to do the best.
Okay, all right, Manisha, thanks so much for that. Well, keep an eye out on the markets. We're still down closer around 10 points odd, but the mid-cap index is doing well. We have quite a few of those metal stocks as well that have spiked up in the last 1 hour odd, and a couple of these other stocks like Century Textiles as well. That has moved virtually to the high point of the day at around 1,200 rupees per share as we speak. On that note, we'll wrap up on Halftime Report. You stay with us. Business Lunch comes up next.